Degas Wright, and he's doing a lot of stuff, and I wonder what that says, Degas, about your current view of the market. You've sold some things like McDonald's and O'Reilly, clocking some profits there, and you've bought General Motors and Etsy and Netflix and Activision and Disney. By the way, Activision, one of 66 new S&P 500 52-week highs today. So talk me through your strategy here today.
Yeah, so, Scott, ultimately what we're looking at is that we had some profits, so we took those off the table and we redeployed. And what we looked at is that, one, General Motors, it is heavily focused on the EV technology. And this is where it's going to really take leaps and bounds going forward. As we did our research into this company and looked at our models, we found that this company actually has a very, is priced very well. So what we look at, a lot of times we talk about valuation. So I wanted to spend some time talking about the way we value companies. Ultimately, we look at several different measures, and one of those measures is the operating cash flow yield, where you take cash flow and you subtract out the operating expense and the capital expenditures, and then you divide it by the price. And so what we found is that when we looked at that type of measure, the General Motors had a very rich 34% yield. So that's really good from a valuation perspective. We also looked at Etsy. Etsy is into the creative entrepreneurship. It is a company that's very innovative and is providing opportunities for people to be entrepreneurs. 95% of these companies actually work from home. And we've already been talking about work from home category. Netflix, it's a growth story because it's actually growing faster in Asia Pacific than anywhere else, and because it's the mobile platform. So this gets us into not only the EV, it gets us into the entrepreneurship drive with Etsy. We have the streaming with Netflix. Disney gets streaming, and it gets into the open of the economy with the parks. And lastly, Activision gets into gaming. So we looked at where are we going as an economy, looking at valuations, and so that's why we made these moves.
Okay.